Welcome back. You're watching India Market Close here on NDTV Profit. That time of the show where we get you the bull versus bear segment. Auro Pharma is the stock which we had told you about, that we'll get you a view on a bull versus bear case. And Varsha joining us on that note. Varsha.
Well, thank you for that. But overall, the pharma sector is up today because the report says, or analyst says, that maybe the India-US trade deal, when it comes, the tariff would be lesser to Indian pharmaceutical companies, and that's the reason you're seeing many pharma companies are up in a trade today. But shifting back to Aurobindo, which is up almost 3%. If you see, let's see what is working for the company. You have strong product pipeline. The company anticipates robust growth when it comes to FY27. Now, this is on the back of the biosimilar portfolio that they have, and also the high value launches that are upcoming when it comes to US market. Europe is also expected to sustain, high teen growth with new launches and 6 products which are in line. But onto the headwinds, if I were to talk about, the near-term headwinds would be FY26 looks muted for the company as per management, now particularly in the US due to rising competition and of course due to the declining revenue from Revlimid, that is the cancer product, which may impact FY26 numbers. But with company do have good biosimilar portfolio. They have 4 biosimilar already approved with significant approvals expected within 4 to 6 quarters, and the company has a strong foundation when it comes to overall biosimilars, and substantial revenue can be seen from FY27 to 31 in this high growth segment. But while FY26 EBITDA margin is targeted to be maintained at 21%, the company faces pricing pressure when it comes to US, and also the profitability is exposed to regulatory concerns and the tariff concerns that that the all pharma companies are expecting. But their Pen-G business, which is the next leg of growth for the company, that has a potential, potential opportunity. So the Pen-G business holds significant potential to contribute substantial to EBITDA when plant goes to at a high capacity, or at full, when plant will run at a full capacity. We may see a good growth in from Pen-G number, because I think that's the reason why a company is expecting good growth when it comes to FY27. But lastly, the revenue ramp up from the biosimilar, if you see, is highly contingent on the regulatory outcomes and the complex dynamic competitive landscape that the company has. But overall, FY26 will be kind of muted, but FY27 can see a good growth when it comes to Aurobindo Pharma.
Okay, so that's the case with regard to Aurobindo Pharma. I mean, we've taken a view from Avinash, of course, with regard. Thank you so much, Varsha, for putting that into context. We've taken a view from Avinash, of course, on an Aurobindo Pharma. Also joining us, Amar Dev Singh, who's Senior Vice President Research at Angel One, joining us this afternoon. Amar, do you have a view with regard to an Auro Pharma 3% higher?
Yeah, actually, if you look at Auro Pharma, so what we are seeing here is that the stock was in for consolidation for quite some time, and now we've seen that break above the level. So earlier, somewhere around 1170, 1180, the stock was meeting with some sort of resistance. But ideally, if the stock is managed, or stock manages to sustain above the 1200 level, we could witness a sharp rally in the stock. As far as the structure of the stock is concerned, from a short-term and intermediate-term trend, clearly there is some positive bias which has been built. Long-term, what we saw that the stock had corrected significantly, almost from 1600 levels to 1000, and then it's inching up higher. So I would say that there is a possibility that we could see this follow through, but for that it needs to sustain above the 1200 levels. So one can definitely look at this stock. Sustaining above 1200 levels, it has a potential to rally towards the 1285, 1287 level. So this is one stock definitely one can be looked at, and the stop loss needs to be somewhere around the 1131 levels.
Avinash, a view with regard to healthcare, because that's the other sector which seems to be showing some zing. Maybe not today, but in general. Do you have a view with regard to healthcare, and give us a couple of your favorites very quickly? Avinash?
Yeah, sorry.
No.
No, within this pack, Harsh, I think we like Fortis and Yatharth hospitals and Apollo hospitals. I think, see, hospitals is a very promising space where I think the growth trajectory is going to be very solid. I think specifically for companies, which are operating into specialities and where, obviously the margins are much better. I would say that, obviously investors who are looking at a reasonably medium to long